Okay, I think we'll make a start. Good afternoon, everyone, and welcome to the Wine Australia webinar on the 2024 National Vintage Survey and Export Report. My name's Angus Barnes, and I'm the Executive Chair of the Wine Communicators of Australia. I'd like to acknowledge that I'm hosting this webinar from the lands of the Gadigal people of the Eora Nation. I also acknowledge the traditional custodians of the various lands on which you all work today and the Aboriginal and Torres Strait Islander people participating in this webinar. I pay my respects to elders past and present and celebrate the diversity of Aboriginal peoples and their ongoing cultures and connections to the lands and waters of Australia. Today we have Wine Australia Market Insight Senior Analysts Sandy Hathaway and Angelica Crabb, who will present a summary of the 2024 National Vintage Wine Grape and Australia's export performance from 2023 and 2024, together with analysis of the outlook for 2025. I will at this stage also acknowledge that Sandy Hathaway is a board member of the Wine Communicators of Australia. In this presentation, insights will include the impact of the removal of China's wine tariffs on exports, the change in mix of whites versus reds in the crush, reflecting changing consumer demands, some indicators of grape prices for inland regions in 2025, and some key trends driving wine consumption and the implications for the Australian wine sector. Both Sandy and Angelica have a long history as senior market analysts at Wine Australia. They both have a strong knowledge across all insights, but perhaps Sandy has a slight lean towards the supply side and Angelica has a slight lean towards the export side. We often have Peter Bailey with us doing this presentation, and Peter sends his apologies, but the upsides is we are spared some of his often mildly amusing jokes. We've allowed plenty of time for any questions that you may have to be answered at the end of the webinar. However, feel free to send them through as they come to mind. And at the bottom of your screen, you'll see a Q&A box. And if you just type your questions in there, we'll get to them at the end of both Sandy's section and Angelica's section. And as usual, this webinar will be recorded and a link to this recording will be sent to you should you wish to watch the content again at a later stage. It's now my great pleasure to hand over Sandy Hathaway, Market Insight Senior Analyst at Wine Australia, as the first speaker in today's presentation.
Thanks, Angus, and good afternoon, everyone, or good morning if you're in WA. As Angus said, I'm going to be looking at an outline of vintage 2024 and what I see as the four notable features, and Angus has hinted at some of those already, and how how prices are looking for 2025, which is really an opportunity to introduce you to our grape price indicators dashboard. And then Angelica will look at exports, China tariffs, and the key trends driving consumption. Which, and in a sense, coming full circle at that point back to giving you some context as to why the vintage trends are the way they are. Right, so vintage 24, and this was, the 10th time that Wine Australia has done the vintage survey. So we now have 10 years worth of history in our dashboard, which I think is pretty good. And now just to make sure that there are some people out there in webinar land, if you'd like to have a guess at what this region is, perhaps you could type it into the Q&A and we'll see who's right at the end. And it would also be nice if you could put in where you're from or what region you particularly associate with. So yeah, if you wouldn't mind doing that in the Q&A, we'll come back to it at the end of my section. All right, so looking at the vintage 2024, and as I said, I'm going to give you what I think four most notable features about the vintage, and two of them are evident on this slide. The first is that vintage 24 was up compared with 2023. It was 1.43 million tonnes, which was 9% up. And actually, let me note at this point that I think with the kind of stuff that I do, there's a real risk of death by numbers for an audience. I'm going to avoid specific numbers as much as possible. All these numbers are in our National Vintage Report and in our dashboard. So yeah, I hope this will be a bit more of that sort of general overall feel of the numbers rather than specifics. So as I said, the crush was up by 9% compared with last year, but then last year was at over 20-year low. And so the second key feature is that our vintage 2024 was still well below the 10-year average. And if you look at this chart, you can see that, in fact, 3 of the last 5 vintages have all been well below the 10-year average. So there is definitely a declining trend. And when you look at this slide, now the scales are very different here. The first slide on the left shows you the 3 biggest states, the 10-year average, the 5-year average, and 2024. And it's easy to see that there is a declining trend there, with 2024 below the 5-year average, which in turn is below the 10-year average. The other thing with that is that those top 3 states actually make up 96% of the crush. So when you look on the right, I've magnified the scale so you can see that, in fact, on those smaller states, we're not seeing that same decline. Although it is probably also fair to note that we have probably had an improved response rate from those states over time. So the crush survey is based on people sending in their crush details. It's voluntary, and the higher the response rate, obviously, the higher the crush figure we can report. We had a record response in 2024, which was really nice. After 10 years, we had over 700 wineries responding. You can see there Tasmania actually had a record crush in 2024, but even so, that Tasmania green bar is only 1% of the national crush. Okay, so that's the first 2 features. Now, the third feature, Angus mentioned this, whites were above reds in 2024. And when you look at this slide, the last time whites were above reds in crush size was 2014, so 10 years ago. And they've actually been declining in share of the crush until the last couple of years. And looking at this a little more closely, this slide breaks down since 2010. The bars show you the crush from the cool temperate regions and the warm inland regions. So the warm inland regions being the Riverland, Murray-Darling, Swan Hill, and Riverina, and cool temperate being everywhere else. So everywhere from Margaret River to the Granite Belt. It's a big range. Nonetheless, you can see that, in fact, it accounts for a lot less of the crush. It's about 30% in those cool temperate regions. And here you can see the fall off in reds, particularly in the inland regions and particularly in the last couple of years. Whereas warm inland whites have always really been above reds, and apart from a real drop last year, they've shown quite a recovery this year. So looking at that overall, I guess it's an increase compared with last year. This shows you how that was broken down. So you had the 2023 crush of 1.3 million tonnes. This year, cool temperate reds were in fact down by 20,000 tonnes compared with last year. The whites were slightly up. The warm inland reds were slightly up. But you can see the warm inland whites contributed almost all of the increase to get to the 24 level. And that, that really sort of strongly shows you that there's a choice factor in here. Like, choice might be a bit stronger word, but if this was entirely weather dependent, you would probably expect something roughly similar for reds and whites, although it does also depend on regions and varieties and what happened last year. But what we can see here with such a strong increase in that warm inland white component, that there's been an element of choice behind what gets crushed and what doesn't. When you look at the whites by variety, and this is across the whole country now, you can very much see that all the major whites increased by quite a lot in percentage terms, but the size of the bar shows you the tonnage. So really it was Chardonnay contributing that increase to tonnes. But all the whites went up except Semillon and Gewürztraminer, which is the 10th largest white variety. And because of this, Chardonnay actually ended up the #1 variety. And some of you may have seen the headlines, which for some reason, the journalists decided that Chardonnay was daggy, but had now returned to former glory. I'm not quite sure why they think that it was daggy. But anyway, yes, for the first time since 2013, the Chardonnay crush exceeded the Shiraz crush. yeah, even though it was 8% below its 10-year average, and in fact, the third smallest Chardonnay crush in the last 20 years. So you can see there the kind of interplay between an increase compared with last year and compared with red varieties, but combined with an overall decrease really compared with earlier years. Looking at the red varieties, in fact, here it's even starker. Although I said to you before, reds were down, and they were, when you look at the individual varieties, all the top 10 reds were actually up, except for Shiraz. And so Shiraz drove the whole decline, which at a national level was about 48,000 tonnes. Sorry, I said I wouldn't do numbers, but that was a very big decrease just in Shiraz. Again, showing you the influence of selection on the varieties that reduced. Because there were a lot of weather effects in 2024, particularly very windy times around fruit set in a lot of regions. But that doesn't account for this differentiation between Shiraz and other varieties. Okay, so now I come to the fourth largest, or the fourth defining feature, I should say, and I'll pause for a sec. I wonder if it's probably not going to be time to get you to put this in the chat, but I wonder what you think it might be. I'll show you. So you have to think quickly if you're going to come up with your own guess. The fourth factor that really defines the vintage is the ongoing decline in warm inland prices. And that's very clearly shown in this chart here. So cool temperate red prices had a bit of a peak in 2021, so we're still seeing them being down, but you can see an overall increasing trend. Cool temperate white varieties, in fact, are at a record high overall. Although if you were to translate this into real terms by allowing for inflation, I don't think it would look nearly as good. But when you look at the inland varieties, there's two things. Whites have overtaken reds since 2022, and reds have been on a precipitous decline since 2020. And this is despite this low crush. So in normal supply-demand terms, if you had a low vintage, you would expect a higher price because there would be a shortfall. So really what this is showing you is that despite this small crush, we're not in shortfall. We're not even in shortfall of certainly inland whites. And that's significant. And that's where, Angelica will show you pretty much why this is the case. And also, so it's a two-way thing, the effect that the crush is having on our sales, but also the effect that our sales and the global context are having on our crush, and have had on our crush and are likely to have on our crush again in future. And lastly, in this section, the price dispersion. So, some of you might just go, oh, they're not keen on this. Price dispersion is where we look at every single batch of grapes that have been reported and put them in a price segment. So instead of just one overall average, this shows you how much there was a spread of prices. And when you look at the chart on the left, which is the warm inland regions, first of all, looking at the big peak on the far left, this is reds in 2024. They're really very concentrated, pretty much in the $100 to $200 a price segment, dollar a ton segment. Whereas last year, which is the sort of fatter, smaller, close by bar, there was a bit more spread, a bit more up in the 300 range. Now it's just basically all reds have moved into that lower price range. Whites have actually sort of gone the other way. Last year, they had a very concentrated distribution around the $350 to $400 a ton. But this year, which is the slightly lower green peak in the middle, there's that just slightly more spread. In fact, it is spreading in both directions, in fairness. So some white prices are going down. And one of the things anecdotally we think happened is that some wineries paid a bit more for reds and a bit less for whites than they perhaps might have wanted to, in order to perhaps support a grower providing a basket of different varieties. They might have sort of taken the top off the white price in order to subsidize the reds a little bit. And so if I pulled up the price dispersion chart for reds from 2021, those two peaks would be reversed. So the red peak would be at about $600 and the white would be at 400. Now the reds dropped down to 200. It's very, very drastic and over a very short time. And yeah, just for contrast, you can see the cool climate, almost no change really for them. So what's going to happen next year? We'll look at what are the price indicators for 2025. But before we do, Angus, did you get any responses on the Q&A to what region was in the cover of the vintage report?
Yeah, it's 50-50 between Tasmania and Adelaide Hills.
Oh, really? Okay. Well, I'm afraid nobody's right, although I do like the cool climate I guess they've got. It's actually the granite belt in Queensland. So thanks everyone for playing. Appreciate that. And yeah, granite belt is an interesting one that flies below the radar a bit. And we don't get very many tons reported from there, but a big increase this year. So they had a much better vintage, I think. Okay, so now this just very briefly going to look at inland wine grape prices. May not mean a whole lot to many of you. I guess it depends, but really this is an opportunity for me to introduce you to our grape price indicators dashboard, which we built as part of some grant money from the Commonwealth Government last year. And it's very much intended to provide some better information for commercial grape growers so they can take that into negotiations with wineries and say, well, these are the indicators, this is what we think, or this is what the independent indicators are telling us price is doing, rather than being beholden to what the wineries tell them. And there's a sort of lot more background to that. I'm not going to spend time on it today, but very happy, Angelica or I, to talk to you more about this dashboard if it's of interest. There's an awful lot to it. It has 21 different visuals and 12 different data sources. But what I'm going to show you is just how it's operating just at the moment in terms of what it's saying about grape prices. So this image is showing you that total. If you see where it says select a color or variety, we've got total and the arrow is up, it is green. That is a good thing. And it's doing that based on these other factors on the screen. So commercial export prices, bulk wine prices from CIADI, volume of domestic sales, unfortunately, still declining. Stocks to sales ratio is still well above the dotted line, which you might think was sort of the ideal. And then the last one, global production and consumption, showing that production is above consumption. So these indicators are what feeds into the arrow. If I show you specifically Shiraz, it's more meaningful. When you look at the reds, even and despite everything I said, the indication is up for Shiraz. However, it's a pretty low base. It did decline by 4% last year and is at $249 basically across the 3 inland regions combined. So there's really almost nowhere to go but up. So it shouldn't be seen that up means back up to its 2020 peak, but it means that the signals are in an upward direction. And mainly that's that CIADI bulk wine price, which you can see on the right of the screen. The thick orange line is Australia, and you can see that is up a bit. And when we look at Chardonnay, that's also showing up. But the tricky part about Chardonnay, or if you look at this, it all looks pretty balanced, but pretty flat. Like we're not seeing massive increases in price. We're not seeing a really low stocks to sales ratio or anything like that. So again, although the indication is up, that shouldn't drive you to think, oh, great, let's turn all our reds into whites and all will be well, because we're really seeing that there's not that strong push for more whites. Yeah, so in sort of wrapping up my section, those 4 key features of the vintage. Number one, yes, it was up a bit on last year, because last year was 1 in a 20-year low, largely driven by extreme weather events in the 3 inland regions. Number two, It's still well below average. It's about 1.43 million tonnes. Number 3, we are seeing that increase in the share of whites, reflecting consumer demand. And number 4, despite being a small crush, the prices are still low. And really the main reason for that is that we're not seeing a reduction in the supply base. So wineries still have a choice of growers and vineyards and grapes from a supply base that could potentially easily produce 1.7 million tonnes still, because it just hasn't declined since, well, pretty much since we did a record crush in 2021. So until the supply base reduces, we're probably not going to see any major increase in prices. And Angelica will tell you how much we're exporting, but 1.4 million tonnes is the equivalent of about 1 billion litres of wine, which is about what we sell in total in a year. So there's really no undersupply at the moment. And I'm going to wrap up there. So Angus, if there are any questions for me, I can take them now or come back at the end.
So what I'd say is I'll encourage everyone to type any questions in the Q&A box, but maybe I have a few that were prepared earlier. So Sandy, the first one I've got just is about demand or production of particular varieties that are probably new and emerging and trendy. So I look at your slides and see, for example, Pinot Noir and Grenache are growing faster than the average. Are there any other varieties, or are there any comments you want to make about particular varieties that are seeing good growth in the market?
Thank you, Angus. Yes, good question. Again, it's actually quite difficult to answer that without a supply base. So we are very lucky because the government has just given us some money to develop a vineyard register, and that will make a big difference, because what we need to know is what the plantings are, because I might be able to say to you the crush of a certain variety is up or down, but as you know, there are lots of seasonal effects, particularly on the more premium and smaller varieties. It should be said that those top 10 reds and whites that I showed you before account for something like 96% of the crush. And the only ones in there that I'd say we're looking at definitely increasing demand are Pinot Noir and Grenache in the reds. Riesling, perhaps not so much growing in volume, but we're seeing an increase in the price paid. And in the Clare Valley, the price for Riesling went up, jumped above Shiraz. And again, it's been a while since it's been there. Prosecco has been growing for a while and continues to be popular. But even there, you know, if we think about, if you look at this chart, I mean, look how small Prosecco is really compared with Chardonnay. And these are the top 10. So then if we get into something like Fiano, we're seeing that growing off a small base. And there's a couple of others, but we don't know how much is in the ground or non-bearing, or how much is influenced by the changes in the response rate each year. So yeah, I'm afraid I can't kind of give you a hot tip, but I advise everyone to go to the dashboard and have a look at the Vintage Survey dashboard and have a look at regions and varieties and see where particularly the price is growing. And that will give you an indication of where the hot demand is.
Thank you. And one more question, and maybe if you go back to that vintage dashboard chart on Chardonnay, for example, on the bottom right, talks about the global wine production and consumption total. And that's a chart that I always look at to see where I think maybe the future trends are going to come out. And it looks like in 23, for example, that the difference in global production and consumption, whilst both going down, are getting closer. Could you make any comment on that? Is that's probably a good thing in some ways, isn't it? That at least production and consumption are close.
I agree. And I must say, I started this year thinking things are looking better, you know, and Angelica will talk to you about China, but what with production, global production and consumption definitely coming closer. Quite a few of the Northern Hemisphere countries are more affected by heat and drought than even we are, or have less irrigation, and are pulling out vines. And Chile has reportedly pulled out 10% of their vines. There's lots more talk of that. So production is coming down. unfortunately, consumption is too. Again, I don't want to steal Angelica's thunder, but its production is still above consumption. If you look there, the 2017 is really interesting because that was a year when they basically lined up. And we had a good year in 2017, whereas the rest of the world had a bad year. And that meant we had a really good year for sales and prices in 2018 as a result of a lack of global supply. And anyone who remembers that will see just how dependent we are on that global market. And it's the lifting all boats. So even though that's kind of your bottom end bulk wine, it lifts the floor price and then flows on to all price points. But I don't know if we'll see another one like that because of this ongoing decline in consumption. We have to see whether other countries really do pull out their vines more quickly than we do. I'm not sure what the question was there, but yeah, I agree with you, Angus. I think it's a good thing. It's certainly not going in the wrong direction. It's going in the right direction, but I don't know that it's going fast enough.
Thank you. Do you want to hand over to Angelica now?
Oh yes, okay. We're finished with questions.
I think so.
Let's move forward.
Over to you, Angelica.
Okay, great. Hello, everyone. Everybody see me? So I'm Angelica. I'm another one of the analysts in the market insights team. And today I'm going to be going over the export performance of the last 12 months, as well as some of the consumer trends, as Sandy mentioned, that's driving that performance. Let's make sure this works. Okay, great. All right, so we released our export report in late July, and these are the results here in front of you for the last 12 months. So export value increased by 17% to $2.2 billion, while volume was really stable at 619 million litres. And what really drove that increase in value, as most of you would probably know, is there was a surge in exports to mainland China during the last 3 months of that financial year after the duties on Australian bottled wine were repealed. So then looking now more towards a long-term look at the value. Here you've got two colors here. You've got mainland China in the pink and the rest of the world in green. And you can see how that increase in value in the last 12 months was really driven by premium wine entering mainland China. Exports to mainland China increased by 392 million to 400 million in just 3 months. In contrast to that, the green line, the rest of the world, declined by 4% to 1.8 million. Looking over to volume, you can see that mainland China had much less of an impact on the volume that's being exported. So exports, excluding mainland China by volume, decreased by 5% during the year. And this was the lowest volume since 2003-04 financial year. And most of that decline was coming from Canada and the US, where there was a big surge in unpackaged exports last year, and then that trend reversed during this year. Australia is not the only source country for wine that's struggling in exports at the moment, with there's lack of availability in ships and higher freight rates, a lot of, and of course the declining wine consumption. A lot of source countries are also struggling in their exports. So places like Spain, France, Chile, South Africa, Germany, and New Zealand have all experienced declining exports in the last year. Turning back towards value and how it breaks down by region, you can see that growth to mainland China in the last year has resulted in Northeast Asia becoming the #1 region by value, and that more than doubled in the last year. Europe is the #1 region by volume, but even so, volume declined by 2% and value down by 5%. North America comes in at third, down by 4%. And then Southeast Asia has been really volatile due to the fact that a lot of the markets are very emerging markets. And so exports can go up and down quite wildly because they come off a small base. So that was down 19% during the year. Just circling back now to China. Obviously, the growth in the last 3 months of the financial year was incredibly positive, but it is a result of that filling the pipeline again after a long absence. It doesn't necessarily equate to retail sales, and it will take some time before there's a really clear picture of how Chinese consumers are reacting to having Australian wine available in market again. And the current level that we're at in the year ended June 2024 is really a small fraction compared to the peaks that were experienced back in 2017, 18, 19, as you can see on the screen. And the reason for that is the fact that the Chinese wine market is very, very different to what it was 6 years ago. Imported wine and domestic wine consumption is less than a third of what it was. And again, looking at that volume that was shipped from Australia to China in the last year, that roughly equates to about 47,000 tons of wine grapes. And so it's really only a 5% share of the 2024 vintage. So it is relatively small in the grand scheme of things and is unlikely to reduce the oversupply of red wine that we've got, especially in those warm inland regions. That being said, there were 574 exporters to China in the last 12 months, and 523 of those started exporting in the last 12 months, obviously. But prior to the duties being introduced, there were more than 2,000 companies exporting to China. As far as bottled exports versus unpackaged exports to China, 94% of the value that is exported is in bottled, in glass bottle, and that is due to a lot of premium wine going into the market. However, if you look at volume, 61% of the volume is in unpackaged format. Before I go on to our other top markets, I wanted to go through some of the global wine consumption trends that are impacting on our exports and the exports of other nations now and into the future. So first of all, these are probably not new to a lot of you, and I won't be going through all of them because I don't have time, but one of the important ones is obviously those health and wellness considerations. So that's driving down consumption by consumers in order to protect their health. So per capita consumption in a lot of the traditional wine markets has been declining over the last few years. What's made this worse in the last couple of years is the economic factors. So there's increasing costs, inflation, and the cost of living crisis has accelerated that downward trend because consumers are having to choose between essential items and luxury goods such as wine. And what consumers are doing is there's a little bit of down trading happening, but a lot of the time they're actually just reducing their consumption in order to save money. What they're also doing is that they're drinking at home, which is a habit that they learned during the pandemic, saving money by drinking at home rather than in restaurants and bars. The other trend we've got going on is the demographic shifts. So you've got older consumers who are moderating, and they're being replaced by younger generations who don't drink as much wine as their parents or their grandparents. Younger consumers are much more likely to have a varied drinking profile as well. They're trying different types of alcoholic beverages depending on what the occasion is. And changing tastes means that these consumers are looking for lighter options, which could mean no low options, no low alcohol, but also lighter wines lighter styles, more refreshing whites, and lighter reds as well. So you might be asking yourself, so how are these trends impacting on wine versus other alcoholic beverages? So wine consumption has declined at a much faster rate than other alcoholic beverages since the pandemic. So wine consumption has fallen at 4% per annum, while other alcoholic drinks are declining at 1%. And prior to the pandemic, they were both declining at the same rate of 1%. So per capita wine consumption is now a quarter less than it was 20 years ago, while the other alcoholic drinks are at the same level. So this really highlights that the other categories such as beer and spirits have consistently innovated to remain relevant, whereas wine has really struggled with that, and wine consumption has continued to fall. So moving on now to some of our large markets that we export to. The US is our second largest market by value. And these trends that I just went through are incredibly important when explaining what's going on in this market. Although you've got in the bottom part of the slide there, you've actually got an increase in the number of wine drinkers since 2018 in this market. What's happening is that each wine drinker is consuming less wine. So per capita consumption in the top right-hand corner there, you can see that per capita consumption was quite stable until 2022, where it declined by 6%, and then it fell a further 8% in 2023. And this has resulted in the chart there on the left of a 2% fall in volume each year in the last 5 years, and a further 1% is predicted out to 2028. Thanks to premiumization, which is another trend where drinkers are they're drinking less but better wine. Value, which is the teal line there, is predicted to stay pretty stable, about the same over the next 5 years. The other thing that you need to consider with the US market at the moment is that there's a large inventory overhang that developed after the pandemic. What happened during the pandemic is that there was an elevated level of demand, an artificial, really, level of demand that the retailers and wholesalers then adjusted to. So more wine was put in stock. And then after the pandemic, the demand fell quite quickly. And so there's this stock overhang that's happening at the moment. The US Census Bureau estimates that inventory levels are remaining at 40% above 2019 and 33% above the 10-year average, and about double the 30-year average at the moment. And industry analysts are predicting that this is starting to normalize now, but it's probably going to take another couple of years for that to really clear. So that's probably going to depress the market for a little while longer. Okay, so looking at our export performance, volume of exports has really been declining now since about 2009. Whereas value, which is the red line, you can see that it's been pretty stable really over the last decade or so, with a little bit of a fall after the pandemic in the last couple of years. In the last 12 months, volume fell by 8% and value fell by 1%. And the reason for that was that there was a big surge in unpackaged exports to the US last year in 2023, and that trend has now reversed, which is impacting on the figures. The bright spot for the US was in exports between $2.50 and $4.99 per litre, which increased by 11% in volume and 15% in value. Turning now towards the UK is our #1 market by volume. And looking at the market in general, it was declining pretty steadily ahead of the pandemic. And then that was stalled then in 2020 and 2021. And there was a brief increase in wine consumption again. Now, due to the cost of living crisis and the change in the duty reform that's occurred last year, you can see that wine consumption is now on a steady downward track. in the UK. And that alcohol duty structure, that was changed in late 2023, and they moved to a tax on the percentage of alcohol in a product. And as of May 2024, the price of wine has risen by 6.2%, and that's about double the CPI and the rest of for all goods. There was a temporary measure put in place where wines between 11.5% and 14.5% were charged at the same duty rate. That is at the moment scheduled to cease in February 2025. And at that point, there will be 30 different payable amounts by alcohol percentage that will come into force. And it's predicted that this will lead to price increases on about 75% of wines. And it's also thought that it might increase no and low alcohol products in the market as well to capitalize on that lower duty rate. Like the other markets, the younger generations are also impacting on wine consumption. Red wine is under a lot more pressure than white wine, as consumers are looking for those lighter styles. Looking at the chart on the right, you can see that the premiumization trend is quite static here, and the decline in commercial wines is well outpacing any growth in the premium sector in the UK. Looking at our exports now, firstly, I want to note that the decline in value in 2007 to 2011 is really due to the fact that exports moved from being exported in glass bottle to bulk. So Australian wine didn't all of a sudden get much cheaper. It's because you're removing the packaging costs from that export value. So I just wanted to note that first. Secondly, during 2020 and 2021, there was a big surge in exports, Australian exports to the UK, and that was due to the COVID and the Brexit trends. So Australia is number one in the off-trade in the UK, and as such, Australia really benefited from the pantry loading that happened. Also, ahead of Brexit, there was a lot of producers who wanted to get their product into market ahead of Brexit. So there was a surge in exports for a couple of years. Then, of course, we had the decline after that, and then that's really normalized and stabilized in the last 12 months or so. Sorry. So in the last 12 months, volume to the UK declined by 1% and value by 3%. And that decline in exports was really driven by bottled wine, which is only 10% of what gets shipped to the market. 90% of exports to the UK are unpackaged and then either packaged in the UK or they're shipped on to other European destinations. So unpackaged exports increased slightly during the last year. And then moving on to Canada. Like the US and the UK, the Canadian market is really impacted by the moderation trends and economic factors as well. So the drinking population has declined since 2017, even as the overall population has continued to grow. And what's further a factor for Canada is that the government has introduced new drinking guidelines, recommending no more than 2 drinks per week. And that's compared with 10 drinks for women and 15 drinks for men. That was the guideline previously. So as a result of all of these trends, wine sales in Canada have fallen from 51 million cases in 2020 to 44 million cases in 2023. And it's expected to fall further to 41 million cases by 2028. So looking at imports into Canada, which is what's on the screen in front of you, in the 12 months ended June 2024, total imported wine decreased by 7%, and then it's decreased by 16% if you compare it to June 2021. And the volume of exports dropped from Italy, from France, from the US. And you can see that in 2023, in the context of this declining level of imports, Australia actually took share from others during 2023, as Australian bulk wine was very competitively priced at that time. So how has that impacted our exports? You can see that surge in bulk wine exports that happened in 2023 by the blue color on your screen. And that has now dropped off. So volume has fallen by 11%. Value has been on a downward trend since 2018, and that fell a further 11% as well in the last 12 months. So just circling back to Asia, obviously Asia is predicted to be kind of the growth center for wine consumption globally off of a much lower base. So the things you could see here in the charts in front of you is obviously the decline in China that I mentioned before between 2018 and 2023. But what you can also see is the growth that's expected into these markets in 2028. And Australia really has some good advantages in these markets, close proximity, which is good when you've got high freight rates and sustainability concerns. Australia also has preferential tariffs in a lot of these markets and a reputation for really high quality products. So Australia exports to quite a few destinations in Asia, but as I mentioned earlier with Southeast Asia, a lot of the export performance can be very volatile because wine is such an emerging category in these markets. You also have changes in business structure or business decisions around where to ship into a hub like Hong Kong or Singapore or straight to a market. So you have these wild fluctuations off of low bases in these markets. But I just wanted to pull out Thailand as an example of a market that has been growing over time. And since the pandemic, Australian exports have really surged, and you can see that we're at a record volume at the moment going into Thailand. So Thailand has really rebounded after the pandemic. So it bounced back strongly in 2022 after there was obviously a big decline in consumption due to the lack of tourists and lockdowns. So, and also in February 2024, Thailand's government implemented some laws to reduce import duties and excise taxes on wine for the rest of 2024. And so that's in the hopes of revitalizing that hospitality and tourism sector. So IWSR is forecasting a 3% growth rate for Thailand in both volume and value over the next 5 years. And as you can see, Australia is really well suited to capitalize on that. So that covers off kind of a summary on what's happening with wine exports and consumption at the moment. If you would like to dig into any of this data that we've talked about today, please go to our website. Under the Market Insights menu on the Wine Australia website, there's an area called Dashboards, where you can access the Grape Price Indicators dashboard like Sandy showed you earlier, and the Vintage Survey dashboard, which Sandy also mentioned. There's also the Export dashboard, where you can go through all the export data, and the newly relaunched Market Explorer, which has all the consumption data from IWSR on it. These are all free. You don't have to log in, so please go have a look. If you have any questions on any of those dashboards or anything else data related, we're very happy to help. So please email us, or you can book an Ask an Analyst session on our website as well, which will put a little Teams invite in your calendar and ours, and we can have a chat about whatever you need as far as data. So that's it for me. Are there any questions?
So again, I'm not being inundated with questions on the Q&A box, but feel free to ask them now. I've got a couple, if I may. Okay. Sandy talked about the increase in production of cool temperate whites, which I assume is Chardonnay. Are we seeing a similar increase in growth of premium Chardonnay in the export markets?
I don't know off the top of my head, but I'd have to have a look.
Yep.
That is definitely where a lot of the growth is in a lot of the, I guess, more the Western markets, not so much the Eastern markets yet, although white wine is starting to become more popular in Japan. I'd have to have a look at the specific numbers, but it is one reason, and this isn't Chardonnay, it's Sauvignon Blanc, but it is one reason that New Zealand has done so well for so long is, you know, that's premium white wine, and that is really what consumers are wanting at the moment. Although even New Zealand export numbers aren't looking as good anymore. So that is definitely the trend, is towards those lighter white, lighter red styles. That being said, premiumization has stalled a little bit in a lot of the key markets due to those financial concerns. But we do expect that to bounce back once inflation gets under control.
So I was going to ask you exactly about that sort of premiumization, and particularly in reference to the UK and the USA, and just whether your thoughts are whether the size of the market in total for importing wine or exporting wine into those markets from other countries around the world, as well as Australia, gives us an opportunity to grow in both the UK and the US, and they might be slightly different answers, I suspect.
Yes, I mean, the US remains the most attractive wine market in the world. It is definitely still where opportunity lies. As I said, it's a bit tough at the moment because of the inventory hangovers. But that being said, premiumization versus premium versus commercial wine, it's where premium is, where there's more opportunity. It is a bit depressed at the moment because of financial concerns, but in the US, there is still a little bit of growth at a slower rate, but there is still that little bit of growth in the premium end. In the UK, that has really stalled, and so it'll be interesting to see where that goes, especially with the duty structure and the cost of living crisis. The premium wine isn't growing. It's kind of stalled, but if you compare that to the commercial end, which is declining quite heavily, it definitely is still where there's more of a chance of opportunity at the moment. That's what the figures are telling us anyway.
I've got a couple of questions here. I think the first one might be to you, Angelica. Do we know what styles have been exported to China over the last 3 months ending June? And has this changed to the wine style mix we were exporting to China before the tariffs hit?
It is mostly red wine still. I believe it's in the above 90% is still red wine that's being exported to China, and that was the same before the duties. What I've heard anecdotally is that Chinese wine drinkers are more interested in whites now, more willing to experiment, but obviously this is the first 3 months. We're filling the pipelines, and I think for the most part, it's brands and styles that we used to send over there. So it'll be interesting to really see how it plays out over the next 6 to 12 months, whether some new styles will start to show through.
Thank you. And this question, this might be more to Sandy. Is there any data on the potential use of the Chardonnay crush? E.g., did it go into sparkling base? Did it go into still whites? Something that could maybe explain the increase in the crush versus the market position.
It's a good question. No, unfortunately, we don't collect the use of the Chardonnay. It's Tasmania do, and they have their own report, and you can see it on their website, so you can see the size of the sparkling versus still crush for Chardonnay there. It would be really good, but it's a difficult one, especially because the big wineries, the commercial end, they often don't even know, apparently, at the time of crush whether something's going to be sparkling base or maybe go on. It would be definitely possible at the premium end, but it's just further demand on the people. It's a voluntary survey, so unfortunately we haven't done it. But yeah, I'm actually open to talking to people about doing it, especially say regional associations, maybe something in the Adelaide Hills and the Yarra, or places where there is a higher proportion of sparkling. But no, unfortunately, but that's where the export dashboard is so good, although we don't export a lot of sparkling, but that's where you can actually tease out what's sparkling and what's not, and what difference that makes to the price.
Well, being no further questions and the time running out, so I might use this as an opportunity to wrap up. So thank you very much to Sandy and Angelica for your insights today. And thank you to everybody who attended. Thanks to Wine Australia for your continued support of the wine industry in general and the wine communicators of Australia in particular. Our next webinar will be held on Tuesday, the 10th of September. So it's the second Tuesday of every month. The next one's Tuesday, the 10th of September, and we'll discuss wine education with a Wine and Spirit Education Trust focus. It'll be presented by Matt Irwin from the WCT plus others. Further details will be available soon on the events page on the WCA website. Other things that are coming up, it's wine show season quite clearly at the moment. We've got the Sydney Wine Show lunch on Friday of this week, and in the next months we'll see the wine show lunches with the WCA with Adelaide, and also some involvement with the Melbourne Wine Show. So look at the website on those ones. Just as a reminder, for WCA members, all recordings from previous webinars are held on our website under the education section, so you can see right back through the history of our webinars. If you've got any suggestions on webinar topics you'd like to cover in the program, please email me or email us at wca@winecommunicators.com.au. Thank you both once again. Thank you for joining us, and I hope you have a great rest of the day. Cheerio.
Bye.
Bye. Thank you.
Bye.